Welcome back to 401k DC Hub, your guide through the world of 401k plans, simplified for beginners, back-office professionals, and retirement plan support teams. Today, we're stepping back from formulas and testing to understand the legal and regulatory foundations of the 401k system. Because the truth is, behind every vesting rule, testing limit, and distribution form, there's a law, a statute, a regulation. And Ava, our new 401k compliance coordinator, is now ready to learn them. The pillars of 401k law. Let's start with the three main sources of rules for all 401k plans. 1. The Internal Revenue Code, IRC, IRS jurisdiction. The Internal Revenue Code, enforced by the IRS, governs the tax treatment of 401k plans. Most key requirements originate from here. Section 401k establishes the actual deferral mechanism. Section 415 limits total annual contributions. Section 402G limits employee elective deferrals, $23,000 in 2025, $30,500 with catch-up. Section 416, top-heavy rules. Section 401A4, non-discrimination requirements. The IRS ensures plans are tax qualified. That means employers and employees can enjoy tax-deferred growth, but only if the plan follows the rules. Failing to comply could cause disqualification, which would be a nightmare. Retroactive taxation on contributions, loss of deductions, and severe penalties. ERISA, the Employee Retirement Income Security Act, 1974. Enforced by the Department of Labor, ERISA focuses on fiduciary responsibility, disclosure, and participant protections. Here's what ERISA controls: fiduciary duties. Anyone handling plan assets must act solely in participants' interests, participant rights, to receive plan documents, disclosures, and benefit statements, reporting annual Form 5500, summary plan description, and other required disclosures, vesting schedules, minimum timelines before employer money becomes participant-owned, claims and appeals process. Every plan must have one. Ava realizes the DOL is the watchdog for how a plan is run, while the IRS is the authority on how it's taxed. Plan document and summary. Plan description. Every plan must follow its governing document. This includes plan eligibility and entry dates, vesting rules, contribution types, distribution options, testing methodology, if applicable. The SPD must be shared with every participant and includes a readable summary of their rights, responsibilities, and benefits. Key 401k rules every plan follows. Let's review some of the most important mandatory rules and compliance areas. Annual limits elective deferral limit, $23,000 in 2025, $30,500 with catch-up. Annual addition, 415 limit, $69,000 or $76,500 with catch-up. Highly compensated employee definition, $150,000 plus key employee threshold, $220,000 plus for officers in 2025. Non-discrimination and testing. Plans must regularly pass ADP ACP testing, coverage testing, 410B top-heavy testing, 416 annual additions limit, 415, unless the plan is safe harbor. These are non-negotiable IRS tests. Plan sponsors and fiduciaries must act prudently and solely in participants' best interest, avoid self-dealing or conflicts of interest, monitor investment performance and fees, ensure timely remittance of deferrals as soon as administratively possible. Violating fiduciary duties can result in personal liability and civil penalties. Reporting and filing requirements. Form 5500 annual return filed with DOL, Form 8955 SSA reports terminated participants with deferred benefits. Audit requirement for plans with 100 plus participants, SAR, SPD, and SMM, sent to participants as required by law. Distributions and loans. Rules include early withdrawal penalties 10% before age 59.5, unless an exception applies. Required minimum distributions, RMDs at age 73, loan limits, lesser of $50,000 or 50% of vested balance hardship withdrawal standards, must meet IRS-defined safe harbor rules. If mistakes happen, Ava learns that the IRS has three main correction programs. Self-Correction Program, SCP. Fix errors without notifying IRS Voluntary Correction Program, VCP. File with IRS, pay a fee, and correct audit cap. Corrections during audit with steeper penalties. Real talk, why this matters. Ava's takeaway? All of this exists to protect the plan, preserve tax benefits, and ensure fairness. 401k rules are strict, not to make it hard, but to make sure every employee has a real chance at saving for retirement. And for those of us working behind the scenes in compliance or operations, knowing what governs the plan makes you more than just a processor. It makes you a guardian of the plan's integrity. This episode is for educational purposes only. Always refer to official IRS, DOL and TPA guidance for current laws and plan-specific compliance advice.